This is your dose of daily market wisdom with master trader Nick Santiago. Starting from humble beginnings, Nick has been beating the markets for over 2 decades. He shares with you his take on the profitable trades that will have you moving towards financial freedom in no time at all. To see an in-depth review of his track record and much more, go to inthemoneystocks.com. Welcome. You are listening to your daily dose of daily market wisdom with Master Trader Nick Santiago. I'm Kerry Lutz. It's June 25th, 2020. This is show number 64. And Nick, we're continuing that downward, I don't want to call it a spiral, but the decline is continuing, huh?
Yeah, we've been pulling back really in the S&P since June 8th, and that is continuing today. Markets are falling a little bit lower. You have a pretty good broad-based decline today. I mean, you have the financials after their stress tests. They're trading down. You have JP Morgan down about $5 at the moment, or a little less than 5, but close, down about 5%. And everything is following suit. So right now we're in pullback mode. And again, it's not a hard decline or a big sell-off. It's just very steady and gradual over the course of the month of June. And that probably continues into, I would probably think into the 4th of July holiday.
Yeah, so you think it's going to continue into the 4th. And so, you know, we're down 500 points. That's not really a huge decline on the Dow, right? And you know, they've gone up so high.
Yeah, I mean, we're down a little over 2%. It's still a 2% move, so, you know, it's nothing to sneeze at here. But, you know, we've had such a big run. And when you get those big runs, you're going to get these, you know, a month or two sometimes of sideways action. And really, that's what it is. It's really sideways action. So, you know, if we took out critical levels, I'd be more concerned. But that has not happened yet.
Yeah, so we talked about perhaps the Fed poised to start buying stocks any day?
Yeah, I mean, the Fed right now has said that they would step in and buy corporate bonds. So I think that's there, and I don't think they've done it yet, but I do think that's in the cards. As for them to go out and buy stocks, I'm not so sure. I know they've said that they would buy ETFs, so exchange traded funds. So, you know, definitely got to respect when the central bank, which has unlimited money, they can really create as much as they want, can step into a marketplace. Right now, I think just going back to the last FOMC meeting, the Federal Open Market Committee meeting, they basically said that, you know, they have a lot of tools at their disposal, but I don't think they want the market to get too hot. If the market gets too hot too quickly, that could be problematic. So right now, when we look at this market, it's starting to cool off a little bit, but that's not a bad thing.
Yeah, so it's cooling off. Unemployment continues to drop, albeit slowly, right?
Yeah, unemployment is starting to, you know, get better. It's not going to get, you know, dramatically better because as companies start to open up and people come back to work, some companies just are not going to go back to business, right? So they're going to have to actually lay people off. A lot of people have been getting paid on unemployment here and actually making more money than they did at their job. So, again, you know, we'll see how that plays out. But the unemployment trends are getting better. Now we have this uptick in COVID. That's certainly weighing on the markets a bit. And, you know, we'll see how that shapes out going forward. But you have to think as states open up and you've had riots and you've had all these massive protests with people breathing on each other, it's not unusual to see an uptick in COVID cases.
And more importantly, the death rate still declines. Like, for instance, a couple of days ago, the death rate shot up. And then upon closer looking at it, they figured out that Delaware had reclassified a bunch of deaths that actually occurred in April and put them forward to June. And it was about 70 deaths. And that made the rate go up. But effectively, since April, death rates declining, hospitalization rates declining. Of course, you're going to get flare-ups in certain cities like Houston. And like you said, the riots, the demonstrations, although I'm not so sure because there's a real bone of contention about outdoor transmission of the disease. But it's not too hard to imagine these people hanging out together after a hard day of rioting, knocking back a couple of beers and a few hits off the bong, right?
Yeah, I mean, I don't. I have to laugh at what you just said, but it's kind of crazy when you think about it. Here we are locked down, and all of a sudden we have riots going on. In all these major cities around the country, and we think that we're not going to get an uptick in cases. It's mind-boggling. So. Again, as long as the death rate is low, I mean, that's really, in my opinion, really what matters.
And of course, we know that death rate is overstated, anecdotal evidence, but in Minnesota, they analyzed all the death certificates and found that only 41% of the death certificates that they analyzed, that they reviewed, actually were COVID-caused deaths. The rest were quote-unquote COVID-related, where a person died of something else and they had COVID-19 present. And the interesting thing is, I read a really alarming statistic, but maybe not so alarming, is that most people who get put in nursing homes, elderly, die within the first 5 months. And when they get infected too, then you cut down on that time dramatically. It's a very sad statistic, but it really puts the whole thing in perspective.
Well, it is sad, and it really shouldn't. I wish it didn't happen, but that does say a lot. Everything you said right there just adds to the equation. And again, going back to the markets here, we just want to, we're going to watch the pattern right now. I've been talking about that over the last few weeks. I'm nibbling on some things out here, and again, we'll see how the charts play out. The charts really will make the final decision for us.
All right, so stimulus, we're going to get another one of these. Is it going to do more harm than good? Is it going to be good for the market?
I'm not a fan of, creating more debt. So I've never been a fan of that. I mean, you could look at the politicians that have been in office, some of them for 40, 50 years, and, we're at, $25 trillion worth of debt. That should never happen. But unfortunately, it's the hard reality of the world we live in. So I guess they're going to tack on another trillion.
Yeah, trillion here, trillion there. Pretty soon you're talking about real money. And actually the guy who said that was Senator Everett Dirksen from Illinois. And the exact quote was $1 billion here, $1 billion there. Pretty soon you're talking about real money. It just shows that wasn't that long ago. That was 50, 60 years ago. Here we are. We're throwing trillions around. We've literally added 3 more zeros to what makes big money, at least insofar as the government's concerned.
Yeah, it's actually mind-boggling to think about the amount of debt we have out here. But until we lose confidence in the system, the market can go up on printed money, and that's basically what's been happening. Not only now since March, but you can make a case since 2009. So when we had the 2008 financial collapse, the markets were resuscitated on the back of printed money. QE1, QE2, QE3, Operation Twist. Now here we are in QE4 Unlimited. So again, that seems to be the playbook, and it'll work until it doesn't, and one day it will not work anymore.
Yeah, we know that's coming. That day is definitely coming. One thing Trump kind of did that was kind of, it's interesting. He refused to bail out the blue states and the blue cities for the coronavirus and all the revenues they've lost. And now that they realize there's no bailout coming before the next presidency, and it might very well remain Trump, it's forced them to reopen whether they want to or not.
Yeah, and, again, I don't like to get too much into politics, but, when these places close down and they don't want to reopen, and some of these governors or people in charge say they're going to open up later down the road, I mean, that's financial suicide, and you're hurting people because they're not working. Everything went up from child abuse, spousal abuse, alcohol and drug use. I mean, you're just creating a bigger problem.
Yeah, that's for sure. We know all that. The so-called cure is worse than the disease. I mean, these face masks, I'm going to have Dr. Ted Noel on the show a little later today, 35-year critical care doctor and ER doctor, and he explains the absurdity of mandatory mask requirements, but that's for another day. anyway, if you're interested, you can listen to that. So, Nick, you think the decline continues on? It just doesn't feel like it's a broad-based, like tsunami type of decline. You know what I mean?
Yeah, it's not a hard sell. What it is what we call in the business a slow bleed. And, again, we've had such an amazing move from the March lows to the early June lows in the S&P. And now we're pulling back. But as long as you pull back and you don't crack major levels, it'll turn into a buying opportunity. I assure you that. If we break certain levels, then, all bets are off. These markets are going to be in big, big trouble. But right now, you got Biden supposedly leading in the polls. That's a big negative. You got COVID virus upticks. That's a big negative. We have unemployment. We already know about. That's a negative. Then if if you get the COVID cases going up, then people can't travel. They can't do they can't go on vacation. That's a big negative. So, you got lots of negatives. And even out here today, we had the Texas governor say he's going to shut down bars at 12 o'clock this afternoon. I don't know how he picked that specific time, but again, that's a headline negative. So, you got lots of negatives out here. The markets will work themselves out, and, we'll watch the chart and we'll let the charts tell us what to do.
All right. Well, that's always the case. Let the charts tell us. Just let the charts lead the way forward. In any event, make sure you go take a look at Nick's site, inthemoneystocks.com. His trading record's there. A lot of valuable info free. Check out the Twitter feeds at ITMS, at Nick Santiago01, and at Kerry Lutz. And we love getting your questions. Just send us an email, kl@kerrylutz.com. And Nick, we will pick up on Monday and see what happens next.
Sounds good, Kerry. Have a great weekend.
This concludes another episode of Daily Market Wisdom with Master Trader Nick Santiago. For more information, go to inthemoneystocks.com and see Nick's full trading record, or check out the Twitter feeds at ITMS and at Nick Santiago 01.